In today's dynamic and ever-changing financial landscape, investing in the stock market has become more accessible than ever before. As a beginner, navigating the world of online stock trading can be overwhelming. But fear not. With the right tips and platforms, you can easily get started on your journey toward financial success. In this video, we'll explore the best tips and platforms for online stock trading in 2023, helping you to make informed decisions and maximize your returns. So whether you're looking to grow your wealth or simply expand your knowledge, let's dive into the world of online stock trading together. Best online stock trading platforms for beginners in 2023. TD Ameritrade. The finest online trading platform for people looking for educational materials to aid in learning the fundamentals of investing is TD Ameritrade, since it offers free access to real-time data, simulated trading, charting, and over 400,000 economic indicators. One of the biggest online stock trading platforms is TD Ameritrade, which provides investing choices that some other platforms do not, such as free Forex trading in 21 different currencies. You can buy IPO stocks through TD Ameritrade on the main market, if Ameritrade is a member of the selling group, or the secondary market. Using TD Ameritrade's web platform and mobile app, users may access all trading information as well as the firm's planning, research, and instructional resources. The TD Ameritrade TV network, daily market research, and even Twitter's social sentiment analysis are included in this. Investors may perform simulations using the Thinkorswim tool from TD Ameritrade before making a deal. They can also produce sophisticated charting and earnings analysis reports thanks to it. Also, you may make watch lists for the stocks on your list and sign up for alerts that follow their price, volume, and position. Customers of TD Ameritrade may use the mobile app to trade all asset classes available. E-Trade. E-Trade is an online trading platform that provides a user-friendly interface and a wide range of investment options for its users. As a beginner, you can choose from a variety of investment options, including stocks, bonds, ETFs, mutual funds, and options, making it easier for you to diversify your portfolio. Around 9,000 mutual funds are available for purchase through E-Trade, over 4,000 of which are no-load, no-transaction fee products. Moreover, E-Trade provides checking and savings accounts that let you securely move money between all of your accounts. Online trading in U.S. stocks, exchange-traded funds or ETFs, and options are all free of charge, making it simple for novice investors to begin constructing portfolios. For individuals who might want extra assistance, there are also managed portfolios with a set yearly management charge of 0.3% available. Fidelity. Since it offers low margin rates, access to a broad selection of investment options, and commission-free trading for stocks, options, ETFs, bonds, and mutual funds, Fidelity is the finest overall online broker platform. Fidelity provides a variety of investment options, including self-directed brokerage accounts for people who wish to manage their portfolios, and Fidelity Go, an economical robo-advisor for those who choose to invest passively. There are 2 alternative wealth management plans available, both of which assist personal financial consultants for those who want to maintain larger portfolios and a more varied investing approach. No minimum deposit is needed to start a brokerage account with Fidelity, and there are no account fees. Also, at 8.5%, it provides one of the lowest margin rates. Brokers charge investors with margin accounts, a specific form of account that allows you to borrow money from the brokerage to buy shares and margin rates. These prices can differ greatly between brokers and occasionally reach 12%, like with TD Ameritrade. In addition to local and foreign equities, precious metals, cryptocurrencies, and dollar-based investing through fractional shares, Fidelity also offers a wide range of other investment products. Charles Schwab. Charles Schwab is one of the greatest online trading platforms for ETF transactions because of its extensive variety of more than 2,000 commission-free ETFs from various asset classes and fund firms. Investors may create a brokerage account with Charles Schwab without a needed account minimum and take advantage of zero-commission trading on stocks, ETFs, options, and mutual funds that are listed online. Also, the organization provides regular Roth and rollover IRAs, as well as broker-assisted transactions. You may trade stocks without a minimum account balance in 12 overseas marketplaces and 7 local currencies using Schwab's global account. Also, you get access to third-party research, foreign stock screeners, and Schwab's international stock ratings. Together with self-directed trading alternatives, Schwab also offers automated trading and expert advisor-assisted investment planning. It also features multimedia resources like podcasts, live programming, and videos. Overall, Charles Schwab is a great online trading platform for beginners who are looking for a wide range of investment options, low trading costs, and comprehensive educational resources. Best online stock trading tips. Online stock trading can be a profitable and exciting way to invest your money, but it can also be overwhelming and confusing for beginners. So let's dive in and explore some tips that can help you get started with online stock trading. Buy the right investment. The ideal stock purchase is much easier said than done. Everyone may observe a stock that has performed well in the past, but it is much harder to predict how a stock will perform in the future. You need to be willing to put in a lot of effort to manage your investments and evaluate companies if you want to be successful in investing in individual stocks. You should consider a company's fundamentals while examining it, such as its price-earnings ratio or PE ratio, or earnings per share or EPS. The company's management team should be examined, its competitive advantages should be assessed, and its financials, especially its income statements and balance sheet, should be studied. Even these things are only the beginning. Create a diversified portfolio. The fact that an index fund includes a variety of stocks right away is one of its main benefits. For instance, if you purchase stocks in a broadly diversified fund based on the S&P 500, you will have exposure to hundreds of firms in several industries. Yet you might alternatively invest in a fund that is just narrowly diversified and that focuses on one or two sectors. Diversification is crucial because it lowers the possibility that any one stock in the portfolio will have a significant negative impact on the portfolio's performance as a whole, which increases your total returns. In contrast, if you just purchase one stock, you are effectively putting all of your eggs in that one basket. Diversification doesn't merely refer to holding several stocks. It also means investments that are spread among different industries, since stock in similar sectors may move in a similar direction for the same reason. Be prepared for a downturn. For the majority of investors, taking a loss on their assets is the most difficult challenge. You will occasionally experience losses as a result of the stock market's volatility. You'll need to be tough to manage these losses, or else you would panic, buy high and sell cheap. Each stock you hold shouldn't have a significant influence on your overall performance as long as you diversify your portfolio. Purchasing individual stocks might not be the best option for you if it does. No matter how hard you try, even index funds will vary, so you can't completely remove risks. You should be aware that there is a chance of losing money while investing because stocks don't provide assurances for the principal. If you're looking for a guaranteed return, perhaps a high-yield CD might be better. Keep investing over time. It might be simple to invest all of your money in the market and feel accomplished, but individuals that achieve true wealth do so over time by continually increasing their investments. This entails establishing good savings habits, such as setting aside a portion of your income so you may invest it in the stock market. You'll be able to invest more money and accelerate the growth of your wealth. If you have a 401k retirement plan, which deducts money from your bi-weekly paycheck and invests it in the investments you've chosen, you may already be doing this. Several brokerage accounts let you set up automatic payments to your account even if you don't have a 401k. Then you may be able to set up automatic investments at a broker or one of the best robo-advisors. You can automate the process of investing, helping to keep your emotions out of the process. Well, there you have it, our top tips and platforms for online stock trading in 2023. Remember, investing in the stock market can be a great way to build wealth over time, but it's important to approach it with caution and make informed decisions. With the right tools and knowledge, you can make the most of your investments and achieve your financial goals. Thanks for watching and happy trading!